Hello everyone, I'm Dr. Ishi Mohan, Assistant Professor, Faculty of Commerce, BHU. Today I'm going to take you to the journey of Module 2, Lecture 3, which will be focusing on the practical problems of the tools and techniques of the financial statement analysis. What we have studied in the previous modules on the lectures is the common size statement is one of the very popular technique and tool of financial statement analysis. Now, if we go through the slide, we have already shown you the format of a common size balance sheet. As you can see here, this is a balance sheet of an organization having the various items of equities and liabilities as well as the assets and the 2 years dictating the absolute amount and the percentage change of the balance sheet related to the financial items. Now, this is the problem which we are going to solve. From the following information, you have to prepare a common size balance sheet. This is a balance sheet of an organization showing on the 2 date, that is on the 31st March 2022 and the second is for the 31st March 2023, showing the various items of the equities and liabilities like the share capital, long-term loan, trade payables and other current liabilities. Assets are also there, showing some of the fixed assets and the current assets like the stock, debtors, cash and current assets. Now to go through this problem solving, this is the format. We have one side, we have to write the particulars. Then there will absolute amount, which will show the amount of change and the percentage change. The 2 years are the previous and the current year. The very first item was share capital. As you can see in the question, that for the year 2022 it is 50,000 rupees and for the year 2023 it is 80,000 rupees. To find out about the percentage change, 50,000 is of rupees 120. 120 comes from this total of the equities and liabilities. So what we have to show here is how much 50,000 is of rupees total, that is 120, and when we calculate it, it will come out of 41.67%. Second item is a long-term loan. This is 40,000 for the year 2022 and 50,000 for the year 2023. As you can clearly see, 40,000 of rupees 120 is 33.33%. Next item is a trade payable, that is 20, and for the current year 30. 20,000 of rupees 1,20,000 is 16.67%. Other current liabilities are there, which is for the previous year 10,000 and for the current year, and 10,000 is 8.33% of total liabilities, which is 120. By totaling, for the previous year it is 1,20,000 and for the current year it is 1,65,000, and when you add all these up to it, it should come 100%. Similarly, we will do the calculations for the current year, like 80,000 for the current year and the total amount is 1,65,000, and this is total percentage of 48.48%. Coming to the long-term loans, 50,000 of 1,65,000 will come at around 30.3%. 30,000 of 1,65,000 will come at around 18.18%. And similarly, 50,000 of rupees 1,65,000 will come at around 3.03%. And when we will add up to it, it will come to the 100%. So this helps us to show the comparison in the percentage change. As you can see, there is total of 4 items here. Share capital has significantly increased from the previous year, that is of 41% to around 48%. Long-term loans has decreased significantly from 33% to 30.33% for the current year. Similarly, trade payables have increased a little bit of around 2% and the current assets have significantly decreased from 8 to 3.03. So current liabilities have decreased. So this helps an organization to take some of the better decisions regarding their liability sides. Now coming to the asset side, as you can clearly see here, for the asset side also we will go through the same process. Assets, to start with, we have fixed assets, current assets, then you have current assets of stock, debtors, cash, as well as other current assets. Stock 10, 20 for the previous year and 25 for the current years, again 20 for the previous year, 25 for the current year, 10 for the previous year and 20 for the current year. So its total will come around 120 and 165. As we know, this is a balance sheet, so both the assets and the liability sides should be equal. Now same process, how much percentage is fixed assets, that is 60,000 is of rupees 1,20,000. So 60,000 of rupees 1,20,000 is how much percentage? It will come at around 50%. Then there are other assets 10, 15. So 10 of 1,20,000 will come at around 8.33%. Then the other asset is 20, 20, 10, 25, 25 and 20. So 20% of 1,20,000 will come at around 16.67%. Since this amount is the same for the other asset, current assets, it will come at around 16.67%. And for the last other current liabilities, it is 10, which is of 8.33% of 120. Current for the current year, 80,000 of rupees 1,65,000 will come at around 48.48%. 15,000 of rupees 1,60,000 will come at around 9.09%. 25,000 will come at around 15.15%. Same amount 15.15%, and the 20,000 will come at around 12.12%, and both will add for 100%. It should add up to the 100%. So clearly you can see here also that from previous year the fixed assets have decreased by 2% and the other things have either increased or decreased in a very insignificant manner. So it helps an organization to just take a look and see what the respective and the relative changes of the financial items in the balance sheet has happened. Now this is about the question number 1. Now the last practical question of this is the practical problem of 2. Now previously we have seen in the balance sheet, now we will see it in the income statement. We all know that income statement is popularly known as the profit and loss account, which shows the financial performance of an organization. As you can clearly see in this question, there are the revenues from the operations, that is the net sales. Then the net sales will come from the gross sales minus the return. So what we will take as a basis 4,80,000 for the previous year, and for the current year it will come at rupees 5,70,000. Other income will also be there, but we will take it as an over and above of 4,80,000 rupees. Now the expenses will be deducted from it. When we will deduct the expenses, The total expenses will be here, and lastly that will be PBT, that is known as profit before tax, from which the income tax will be deducted and we will come at the PAT, popularly known as the profit after tax. So we will see the calculations of it. Same format, same scenario, just a little bit of different calculation. Here you will see the absolute amount. It's important because it will show the qualitative aspect of the change. Percentage of balance sheet total, income statement, for 2022, 23, 31st March 2022, 31st March 2023. Now what we have here is a net sales. Net sales we will consider at rupees 4,80,000 as a base amount. We will give it a value of 100%. Other income will also be there, which is for the current year it is 30,000 rupees. Sorry, for the previous year 30,000 and for current year it will be 50,000 rupees. Now this is 100% and 6.25 for the other income and 8.77 for the current year. It will be over and above of the 100%. Like if we want to say that the total or the gross in the question, as you can see, the total revenue, then it will come at 100 plus 6.25. So total revenue 5,10,000 will come at 106.25. But what we have to consider or take a base year as 100 only, so we will consider only the net sales amount. Then we will deduct the expenses, what we have seen in the questions. Expenses that we have here is the cost of material consumed. That is a basic raw material consumption, 3 lakh rupees. And for the current year that will be 3,50,000 rupees. Employee benefit schemes are there. That is also a cost for the organization. That is 15,000 for the previous year and 25,000 for the current year. And the depreciation is also a big asset cost for the organization, 1 lakh for the previous year and 1,25,000 for here. Now 3 lakh as a cost of material of rupees 4,15,000, 4,80,000 will come at rupees 62.5%. Percentage 3 lakh of 4,80,000. So this will come to this amount, 62.5%. Employee benefit scheme 15,000 of rupees 4,80,000 will come at around 3.125, and depreciation of 1 lakh of rupees 4,80,000 will come at around 20.83%. Similarly, for the current year, 3,50,000 of the cost of material of rupees 5,70,000 will come at around 61.4. This is a very major chunk of the cost of material and the expense for the organization, and as you can see it is clearly more than a 50% of the total expenses. Now the employee benefit scheme 25,000 of rupees 7,50,000 will come at around 7.14%, and depreciation will amount to 21.93%. Now this is the total expenses. As you can clearly see, the total expenses come at around 4,15,000, and for the current year it is 5 lakh. Profit before tax is 65,000 for the previous year, and for current year it is 70,000 rupees. If you will add up the total cost, that was 62, cost of materials, then 3.125 and depreciation 20.83, it totally came at rupees 86.46%, and 13.64% is the total profit before the tax. Clearly it will add up to 100%. For also the current year, 61.4%, 7.14 and 21.93 is the total expenses, which will add up to the 90.47%, and the profit before the taxation will come at rupees 12.28. Now if you go at a one go, you will clearly see that the profit had clearly declined between the 2 years. It is around 1%, but clearly the difference is there. Similarly, you can see that the various expenses have also either increased or decreased, and it will provide a significant importance to the organization while taking the decisions regarding the assets and liabilities of an organization. So this is how you go through the common size statement and the format. Now this is all that we have for practical problem solutions. So this is it, and that is it for the lecture. Thank you so much for your kind attention.